Hello traders, this is Dion. Welcome to my channel. In this video, I want to show you this simple order block trading strategy that I've been using myself for a really long time now. So if you are new to this channel, please consider subscribing, like this video, and you can also join my free Telegram Signal channel. All right, so I know the title says order block trading strategy, but before we go to order blocks, of course, I have to give you other concepts that you need to consider before you use those order blocks effectively. All right, so in this strategy, you need three things, just three things. It's that simple. You need the hard time frame bias, the analysis time frame direction, and the entry time frame trade setup. Okay, don't worry, we are going to explain all of this one by one. All right, so starting with the higher time frame bias. Higher time frame bias, the bias that I use is monthly, weekly, daily, and sometimes the 4-hour chart. Sometimes I use the 4-hour chart, especially it complements the daily chart in most cases. Don't worry, when we reach the 4-hour chart, I'll explain. I'll explain what I mean. So for now, let's start with the monthly chart. All right, so this is the monthly chart. This is the British pound US dollar. This is the currency we are going to use for examples. So on the monthly chart, the reason you need the monthly chart is because when I say bias, I mean what is going to happen during that period. What do you expect to happen during that period? Okay, so this is all about expectations. The thing about bias is it gives you extra confidence for you to take your trades. All right, so when I'm saying monthly bias, let's say it's January. Let's say this is January. Okay, and then in January the price is already going into a certain order block, or maybe it's already in that order block. If it's a bearish order block, in your mind, that is a bearish bias. That's a bearish monthly bias. So that's what I mean by bias. So, of course, a monthly bias is too high for you to just use that as your some sort of just entry confirmation. It's way too big because the market can go in and then start playing around. Okay, these are big movements when it comes to months. All right, so what you need, this bias has to be mixed with the other biases that are down there, which is the weekly, the daily, and sometimes the 4-hour chart. Okay, now it's not only the order blocks that you need to be looking for when it comes to the monthly chart. You also need a fair value gap. So in this case, I don't know if you can see these lines. Yeah, they are very visible. These two lines here. This is a fair value gap. For some of you who don't know a fair value gap is just a void, okay, between three candles. Okay, so you have this candle, you have this candle, and this candle. Now this void, this space, these candles are supposed to be touching this candle here and this green candle here, but they are not touching. So there's a void here. So the market tends to go back to these voids, these spaces. All right, so that's a fair value gap. That's a fair value gap. You can see here, let me just highlight this space right here. Okay, so all that's a fair value gap. So Since you are on the monthly time frame, these candles, you can see this candle here. First of all, it reacted to this monthly order block, but it also didn't close above this fair value gap here. It just went up to the monthly order block and then came down, closed in this same fair value gap. Okay, you can see all these candles that were reacting to the same fair value gap. Even this same the this is the month of July. This is the current candle. Okay, it's reacting to the same order block and then going back into this fair value gap. So that's how bias works when it comes to monthly. So like I said, don't just take the monthly as your confirmation for you to take a sell. This is too big of a bias for you to, unless you are a positional trader, you are trying to hold trades for months. There are traders that do that, but if you are a trader like me, you're a scalper, you're just a swing trader, you have to look down on you have to go back to lower biases, and that is where we are going. We are going to the weekly now. All right. On the weekly chart, you also need order blocks and fair value gaps. In most cases, this is what I've noticed with most traders. When it comes to fair value gaps, fair value gaps are undermined, they're underpaid. I don't know, for some reason. Most people don't put a lot of importance on fair value gaps compared to order blocks. And the thing is, you really have to start considering fair value gaps. Even before you label your order block, you have to label your fair value gaps, because the market can just come to your fair value gap, react to it, and then just leave you hanging when there's an order block up there. So what I mean by that is, you can already see here, you can see these fair value gaps. Here there was a fair value gap, here there was another fair value gap. Now if you remember, on the monthly these lines are still there. Okay, so these can also be reflected on the weekly chart. Okay, this can also be reflected on the weekly chart. If you label your fair value gaps here, they are just the same as on your, though here there are two fair value gaps here, which is just one when you're looking at the monthly chart. So when you look at these candles, like this week, this was bearish. You can tell why it was bearish. Okay, you won't be very confused when you're looking at a certain week and then be like, okay, today it has been very bearish. What's happening? You won't be confused. All right. Now, I want to talk. There's a reason I marked this order block right here. Okay, because it was lying perfectly with the monthly order block. So there are certain times where everything just lines up. Those are times where you take very, very high quality trades with a lot of confidence. So you can see here, this order block, the market reacted to that order block. Okay, it was mitigated here, but it's still valid as long as the market, there's no candle that has closed above that weekly order block. So this is still valid. Here you can see it tried to go all the way up. It just reached the top and then closed within, started running to the downside. So there are times where you find these scenarios. Okay, these are scenarios that you want to pay attention to. If you miss these, you are going to miss a lot of high quality trades. Okay, so I don't want to talk a lot about the weekly. I just want to show you how everything has to line up. Okay, not every time, but this is what happens in most cases. So let's go down to the daily chart. All right, so when it comes to the daily bias, you just want to know, you are projecting what might happen during that day, okay, based on what you have on the chart. I forgot to say something about the weekly chart. Weekly chart, it's a projection, okay? It's a projection of what is going to happen during a certain week, okay? So if you are looking at if the market is it's in a weekly order block, in a weekly order block, of course, you are projecting that the price will fall down. Okay, that's just a normal projection. At least you have some reasoning behind your trade entries. Okay, now going back to the daily chart. So the daily chart, this is a 24-hour candle. Okay, so within those 24 hours, you need to have some sort of projection. What is going to happen today? The majority of price, where is it supposed to go? Okay, so that is what, if you are one of those traders who hold the trade like the whole day, this is going to be very helpful for you. Even if you are a scalper like me, this is also very helpful for you. This is just extra confirmation for you. Now, when it comes to the daily chart, this is not the only thing that you need to be marking. Okay, the reason I was marking weekly chart like this, or the monthly chart, just the order block alone like that, is because those are way bigger. Okay, and you need those two to know where the market is coming from, so that when the market has reached a stage like this one here, okay, you have to know your limits. You have to know where you have to take your profits. If you're in profit, you have to know where the market might end up. All right, so what I mean by that is, of course, you already have a daily order block there, and the market reacted to that daily order block. It also reacted to that monthly order block and the weekly order block. But down here, this is the current market. So this is a secret that I have just revealed to you. Okay, it's very simple and straightforward. You have to pay attention to daily fair value gaps. On the daily chart, price tends to react a lot to fair value gaps, like a lot, a lot. Okay, so when the market is near a certain fair value gap, you have to pay attention to that. You have to pay attention to that. Sometimes it will just react to that fair value gap, just touch it a little like here, and then try to go up. Okay, but this is today. So this is today right here. So the market just reacted to that fair value gap and then tries to go up again. Now, you still need to know where the market might end up, because up there you can see. So when you are labeling these fair value gaps on the daily time frame, these are like suggestions of where the market might end up. So when you open your chart, at least you know where the market is coming from and where it might go. So you on that day, you don't have to be confused why the market is reacting a certain way on the lower time frames. We haven't gone down to the lower time frames. So I just want to show you a bigger picture of what happens on the higher time frames. So every time you open your chart, remember to look at the higher time frames. If you look at the higher time frame, you have to know exactly what is supposed to happen during that day, during that week, or during that month. You need to have a certain expectation, and you have to trade according to that analysis. Okay, so on the daily, this is what you need to be doing. Pay attention to fair value gaps and also order blocks, but pay a lot more attention to fair value gaps. Okay, so let's go down to the 4-hour chart. All right, so this is the 4-hour chart, and let's just start from above there. So I said sometimes I use the 4-hour chart, especially when the daily bias is not making much sense. Okay, sometimes I use the 4-hour chart, but since here everything was just making sense, if you just want some extra confirmation, you can also label the forward chart order block, you can see this order block right here. Okay, I labeled this order block because it has a fair value gap here. You can see this big fair value gap here. Okay, and so this is what happened here. You can see how everything came together here: the monthly, the weekly, the daily, and the forward chart. This is the forward chart. You can see the market tried to close above there, but it just went down. Okay, so this should give you some confidence. Okay, if you are trying to take a sell here, this should give you some confidence because all the time frames are coming together just to support your your entry. Okay, now I want to look at this is the current market here. This is our current market. If you remember this daily fair value gap from our previous slide, this is the daily fair value gap that we labeled. And if you look closely again, this is the forward chart. If you look just closely here, you have another fair value gap. Okay, so this is the forward chart fair value gap. So in trading, what you need is some sort of confluence. Okay, you need some sort of confluence for you to enter a certain trade. Don't just take one trade confirmation and then go with it. No, it's going to take a lot of time for you to be profitable. You need extra confirmation for you to take a certain trade. Of course, you won't be winning 100%, but you'll be winning the majority of the time. Okay, that's what you need. That's what we call edge. Okay, so you can see here how the market just came down. So if you are just on the lower time frames like the 15-minute chart, it's going to be very hard for you to know what's happening here. And you won't have the confidence to enter this trade because if you go down to 5 minutes or maybe 15 minutes, this is a downtrend. You can see the market was going to the downside. But why do you want to take a buy here? Why do you want to take a buy here? It's because of what you've already seen on your biases. I'm not just talking about one bias. Okay, so that is extra confirmation for you to take those trades. You won't have that confusion of where am I going to put my stop loss, where am I supposed to target. Okay, because you already know what's happening on your bias first of all. All right, so I think for the bias that is all. Let's go to our next topic now. All right, so when you're on the analysis time frame, for me, my analysis time frame is the 15-minute chart. That is just my preferred analysis time frame. Yours can be 1 hour. Some people it's 5 minutes. I don't know, but for me, it's 15 minutes. I just like the 15-minute chart. Okay, so if you don't know structure mapping, there's a video for you. This is on the analysis time frame. This is where you do your structure mapping. Okay, you want to know the direction of the market. This is where you know the analysis time frame direction. So in this case, you can see the market was going to the downside because of the change of character. If you don't know market structure mapping, I have a video for you. Okay, you can just check it out. I'll put it in the description. Okay, so here, if you're just looking at the 15-minute chart, it's very hard for you to analyze the chart objectively. Most of your entries are going to be subjective because one, you are only looking at one confirmation. Let's say, in this case, the market is somewhere here. Okay, the market has already broken structure to the upside. What you are looking for is a buy here. It's a buy setup. Okay, so when you start labeling your directional or your extreme order blocks, one thing that you are forgetting is that there's also something called bias. Okay, of course, it's very nice when everything, including the analysis time frame and the bias, just lined up together. But you still have to know what is happening on the bigger picture. In this case, if you are only looking at the analysis time frame, you don't know where the market is at this point here. Okay, so it's going to be very hard for you to even take a sale here because the only thing that you can see is an uptrend. Okay, in your mind, the only thing that you can see, the only thing that you are thinking about, it's buys. So when you wake up, you even mark your, let's say you've already marked your extreme order block here, extreme POI, or yeah, whatever you are marking. In your mind, what the only thing that you want are buys. But if you started on the monthly, you've looked at the weekly, the daily, it's going to be different for you. So this is what you are going to see. It's going to be different. Okay. For someone who is looking at the bias, this is going to be very different. Okay. So let's do this. Just bring back everything. See, this is how even your perspective, even your judgment changes when you are looking at it in this way. If you are looking at it in this manner, even your analysis changes because I'm telling you the bias will always win. Okay, the bias will always win. In the long run, the bias is definitely going to win. Maybe you might take some, let's say maybe you took a buy here, okay, and then the market tried to spike here. Unless you are on the 1 minute chart, maybe you can take a 1 to 2, yeah, and then get something. You can get some coins here. But overall, the higher time frame, the bias is in control. All right. So now this is the analysis time frame. So let's say maybe I took a sell on this. You can see this single candle order block right here. Okay, it's going to sound a bit, it won't make much sense for someone who's just looking at the analysis time frame because they are going to ask questions like, why are you selling here? Why would you sell here? The market is obviously in an uptrend, and especially when you see these green candles just going up there, like this is a strong uptrend. Why are you trying to sell? Right? But for you, who is prepared, who is always prepared in the morning, you mark your charts, you mark your buses and everything. This is going to be an easy trade for you because you already know what you are looking for. Okay. Let's just look at the current market right now. This is the current market right now. Okay, so you have this daily fair value gap and you have this 4 hour fair value gap. You can see how the market came into the same the two fair value gaps aggressively. So in your mind right now you'll be saying this is a lot of selling pressure, so I'm just going to sell. Okay, I'm not looking for any buys. So you would miss these trades here, the trades that were happening here. So I already sent a signal. This was around New York. This was around New York time. Yeah, so there's also there's a free signal channel. There's also a VIP signal channel. Okay, on Telegram. Yeah. So here it's going to be very difficult for you if you are not looking at the bias. Okay, because right now if you are just doing the 15-minute chart, you are looking for market to take out inducement. Okay, but inducement is all the way up there. But if you entered here, that inducement is just going to be your target profit. Okay, since this is going against the analysis time frame direction, then that inducement is just going to be your target profit. Yeah. So let's try to go to our trade setups now. I want to show you everything, how you are supposed to line up everything so that they make sense. Okay. All right. So now, after considering all those biases and also the analysis time frame direction, you need to take a trade now. So how you take a trade also matters. You don't just have to take random trades or in random places or during a random time. No, these things have to be objective. They have to be specific. Okay. So let's take, for example, the same one that we marked here. So you are going against the trend here. On the analysis time frame, this is an uptrend, but you are going against the trend here. But if you already marked your biases, this is going to be an easy entry for you. You're already in New York trading session. So my entry time frame, my entry time frames are 5 minutes and 1 minute. Those are the only two that I use. Nothing in between, nothing below, nothing higher. No, it's just 5 minutes and 1 minute. So when you go to 5 minutes, okay, let's see. So going down to 5 minutes, we are talking about order blocks. This is why I said this is an order block trading strategy. Okay, so you have to pay attention to order blocks. Here you have a again, if you don't know what a single candle order block is, you can check it out. I'll put the link in the description. Here you have a single candle order block within another single candle order block on the 15-minute chart. Okay, so let me just label this. You have the 15-minute chart single candle order block. Okay, and also you have this 5 minutes single candle order block right here. Okay, 5 minutes single candle order block. All right, so like I said, I like it when things come together. Okay, I'm talking about confluence. It makes it easier for you to take a trade. It makes it really, really easy for you to take a certain trade. Now, I also have a video on entry setups that you can look for. Okay, but if you are a really, really aggressive trader, these are some of the trades that are very easy for you to. Okay, so in this case, of course, I'm not going to just enter on the 5 minute chart. If you go down to 1 minute chart, because I'm looking for something, if you look at my trading setups, I think I also put that link in the description below for trading setups that you should look for. If you've already watched that video, I'm not going to enter here because I don't have some sort of inducement. But still, if I'm just trying to be aggressive, I'm just going to enter here directly on this single candle order block because uh, liquidity has already been taken up there. Okay, and I'm already in New York. I can just put my stop loss above there. Okay, but to reduce the risk, you go down to 1 minute now. When you go to 1 minute, okay, see, let's see, just stick with me, guys. Okay, so when you go down to 1 minute, this is what you see now. Okay, so On the 1 minute, under 1 minute, you already have a change of character. If you want, you can just label it there, but I'll just do it right here so that it's more obvious. Okay, you have this change of character which had liquidity equals there. You have that change of character, and then you also have inducement right here. I also have a video on inducement. Okay, now after the market took out inducement here, already you have a single candle order block right here. So this is a single candle order block, which is still valid. Of course, the market reacted to it. Yeah, but there's no candle that penetrated through it. In case you didn't see this single candle order block, there's another single candle order block within this same single candle order block. If you want, you can mark it. That's just extra confirmation for you. So here, if you made a trade here, okay, you took a sale somewhere here. If you want, you can put your stop loss above there to be extra careful. But if you trust your analysis that much, because this is already New York, if you trust your analysis that much, okay, so you can start maybe on 1 to 2, you start taking your profits, okay, and then you start just targeting the swing lows here, okay. Sometimes you don't even need like to go all the way down there. Even just here, before the market even left the monthly order block here, you can see it's a risk to reward ratio of 1 to 11. That's a lot. You can just take that and run away. Okay. Of course, the market is still going. But for me, I'm a scalper, so I really don't hold trades for that long. But if you are trying to hold, maybe you can go all the way to inducement there. That is the risk to reward ratio of 27. Okay, if you are holding on the 4-hour chart, you can go all the way down to the 4-hour order block, which is risk to reward ratio of 50 something. But for me, I just take whatever I'm given in a certain session and close. Yeah, so that's how you enter a trade. You can see another one here, this one down here. Let's see 5 minutes first. Yeah, so this is the 5 minutes chart. This is the 5 minutes single candle order block, and then when you go to 1 minute, that's where everything is much clearer. Okay, so here, all right, so here you have a change of character here. Okay, and then the market took out this inducement right here. This is your inducement in form of liquidity. That is your inducement right there. Okay, and then the market came all the way down to this single candle order block again. So if you are taking a long here and then you try to risk a certain percentage down here, if you want, you can put your stop loss just below that single candle order block, but I would rather put it all the way down here because there's another candle down there. Okay, and then this is a risk to reward ratio of 2. You can take something off here, okay, and then when you go up, there's another swing high there. That swing high can be your second take profit. That is a risk to reward ratio of 5. You have another swing high above there. Okay, that's another swing high there. That's a 9 risk to reward ratio. Then you have another one. So when it comes to trading or scalping, what you need is to be taking whatever the market gives you. Okay, there's no need for you to be holding a trade forever. Like here, you can see the market is consolidating here. It has been consolidating for a long time. So if you are holding, of course, it's fine for you to maybe have your target set to that high right there. It's fine if you're trying to hold. But even when you hold, you just have to make sure that the rest of your trades are on break even here so that when the market goes back, you are not losing anything. Okay, in fact, you are just gaining some bonuses here because you've already taken off a lot of profits here. So that's how you trade. So guys, in conclusion, uh, you have to be looking at your daily, your monthly, and your weekly. Okay, those time frames matter a lot. They are there for a reason. They are not just there for decoration. You have to look at them. You have to mark your fair value gaps, your order blocks. You have to know where you are on a certain month, certain week, and a certain day. It's going to be easier for you to take a certain trade with a lot of confidence. Okay, so if you enjoyed this video, please like it and join my free Telegram channel. I post some signals. Sometimes there's also a VIP signal group where I post signals every day. So I think that will be all for this video. Happy trading.